Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
You know, if you drive in early enough to work, you get to see their trucks on the roadway making deliveries to restaurants. A Performance Food Group and US Foods.
Oh, you see? No,
I see them all the time.
I don't come as early as you. I should probably.
Anyway,
but you come in at 3 a.m.
There's like talk about a possible deal takeover, one by the other. Crystal C. is our US Deals reporter. Who's taking over who? Do we know, or is this just rumor at this point?
So we're reporting that U.S. Foods has shown interest in a tie-up. So the companies are actually pretty similar in size in terms of enterprise value. They have a lot of debt, both of them. So at this point, it's early. We don't know who's taking over who just yet. But what we know is if this deal does go through, or if this deal does go ahead, it will face a lot of regulatory scrutiny, and eventually the goal is to combine the company into a company that has like $100 billion worth of revenue.
Do we think it's more about scale, margins, distribution overlap, or just really fending off Cisco?
So Cisco is actually currently the number one. The top 3-4 players.
We should point out that's Cisco with an S.
Cisco with an S, that's right. And that actually, I see those trucks more than I see the others, at least in the city. So Cisco, US Foods, Performance Food, they all have their moment. Like in the past decade or so, actually, they have each like taken top spot, and it's moved around. So there were moments where, you know, they have had activist attack at various different points. So it's interesting that this is the moment where you see that US Food is performing better than Performance Food, despite the name. So it's going to be a very challenging deal. In 2015, when Cisco and US tried for a tie-up, that deal got struck by antitrust. So it definitely is a market where scale matters, margin matters. You can combine regions, you can combine your fleets. So all of those things make it a very good synergetic combination.
The margins right now are like, you said, the razor thin, right?
So it depends on the market that you surface. Like depending on whether you're going after restaurants, is it cafes, or is it like
I should back up.
Schools?
What do these companies do? They prepare food, or they bring? Explain that.
So there are various different things that they do. It comes from they do produce, they do prepared food, and they supply to places like restaurants, hospitals, schools, hotels. So depending on your end customers and what your products are, the margin's slightly different. Also, it means your production would be different, and it impacts costs. So I'm sure there is in these CEOs' head the dream combination of, you know, what the composition of each product or each geographic should be. And well, in this case, US Food clearly thinks that a tie-up with Performance would get them closer to that ideal business portfolio.
And regarding the why now, do you think it has something to do with softer regulations with the Trump administration as compared to the Bidens?
Yeah, that's definitely one big concern. It is a very consolidated industry. So my gut feeling is either way, under whatever administration, it will be looked at by the antitrust. That said, the M&A dealmaker had been expecting 2025 since the inauguration day that this would be a much friendlier M&A market under President Trump, and Liberation Day hit, and that put a lot of things on pause. In the past month or so, we have seen people warming up to the idea of exploring deals, or like, you know, pulling triggers. So there is an element of friendlier regulatory environment.
All right, Crystal, appreciate it. Crystal C., the U.S. Deals reporter from Bloomberg News, talking about Performance Group attracting a takeover interest from U.S. Food. Again, this is a potential deal could create a distribution company with combined sales of something on the order of like $100 billion.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Did you know they use remnants from the manufacture of denim in the U.S. currency?
No,
Yes.
really?
Well, if you hold up a bill, you'll see like little shreds. It looks like, from your jeans.
Is that only in the U.S. or does that happen all over the world?
I don't know. I know that's definitely the case
That's
with
super cool.
U.S. Currency. And that brings us to a discussion about Levi Strauss with their earnings.
Fantastic.
Mary Ross Gilbert is senior equity analyst covering retail for Bloomberg. Did you know that?
I did not. I mean, I know what you're talking about, those little threads in the bills.
No, that's from the byproduct of manufacturing denim. They use it at the Treasury. Mary Ross Gilbert yesterday she was wearing what were you wearing yesterday?
Ralph Lauren.
And today is that Brooks Brothers? No, Gap. Okay.
Very nice.
But it's a Malbon Gap collab. So sold out.
It looked like the little Brooks Brothers thing, but anyway. So Levi, what did we learn from Levi Strauss in their earnings?
So I think what we learned in the earnings report, first of all, very optimistic view. But if you really dissect it, for example, the guidance that they raised on the revenue line, they now expect full year revenue to be up 1 to 2 versus down 1 to 2. Most of it looked like a shift in their view on the currency headwind. And then the other piece was because they had a strong second quarter. So the way we look at it is there's probably upside above their guidance and consensus view, which is in that range. So, we think that the way the business has been reset, look, Dockers is out of the picture now. They got rid of some underperforming lines. They really honed in their SKU count, their stock keeping unit count, and really honed on profitable merchandise. And they've really taken their tops business. They've infused more fashion and style, and it's a growing category for them, as is non-denim bottoms. And of course, their core denim business, jeans business, which they are at the leading edge of the latest trends. And, even slim and straight are still a thing. But the biggest growth is really coming from loose and baggy. And that actually translated with shorts, too, for summer. And that kind of explains why they also had a strong second quarter. And they saw it globally. Very, very good. And across wholesale, too. So that was nice to see that. But DTC, direct to consumer, really led. And that was up double digits.
Have you heard, John, skinny jeans are out and baggy is in? If you look at all the young folks like Gen Z, they do wear baggy pants.
I've got the stretch fabric.
Okay, good.
That's the point at which I find myself.
Okay, that's good. Levi's welcomes all styles. Okay, so more than half of Levi's merchandise needs for the rest of the year, according to the company, they've already been imported. But what will happen when that runs out? Have they released any plans when that happens? And with tariffs set in place by then, assuming?
Yeah, Isabelle, so you brought up a key point, and that is, what is the impact of tariffs? So just to give you a little perspective, Levi's is very well diversified. They only source about 1% from China. So very little exposure there. Vietnam is probably 5 to 9%. Of course, we have news that tariff rate Trump has set, but it's not carved in stone and there's no effective date yet. And as we got news today that Vietnam is saying, hey, we don't want a 20% tariff. We want it to be 10 to 15. Nonetheless, with Vietnam being 5 to 9%, and then Mexico's 5%, and probably that is under their Canada agreement, so chances are they're not affected. And then everywhere else, they're assuming 10%. So the unmitigated impact is only about 50 basis points for the year, but with mitigation measures already taken effect, that's going to reduce it down to just 20 basis points. So they're one of the companies, if I look at my universe of apparel branded retailers, that are sort of the least impacted by tariffs. Unless things change. But we still think that the impact will still not be as significant as it might be for others.
I mean, is a company like this willing to take a hit to margins before raising prices for consumers? It's like 30 seconds.
Yeah, John, they're actually strategically raising prices on some of their new innovation. And that's where they're able to sort of build it in with that new product. And I think that's working effectively.
All right, Mary. Always a pleasure. I can't wait to see what you're wearing next week. Mary Ross Gilbert, a senior equity analyst covering that sounded kind of creepy. Sorry, covering retail for us here at Bloomberg Intelligence.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
You know what time of the year it is? It's time for the mid-year assessments for the global communications and network equipment specifically. Who better to do that than Woo-Jin Ho? He's the senior technology analyst from Bloomberg Intelligence and joining us on this Friday morning from our campus in Princeton, New Jersey. All right, mid-year update. So what's the update, Woo-Jin?
Well, I will tell you, look, the fundamentals are actually fairly positive. You have AI drivers driving certain names like Arista Networks and Celestica, and also the enterprise campus switching and the data center switching have upgrade drivers as well. That's going to benefit someone like a Cisco and an HPE. Now the issue is, and your prior guest was talking about tariffs and export restrictions. Tariffs actually really spooked me out. And does that throw a monkey wrench in enterprise IT spending into the second half of the year and temper the growth and earnings expectations?
So how much could tariffs and economic uncertainty really trip up the global networking sector sales in the latter half of the year? Do we have a number in mind?
Yeah, don't have a number in mind. There's a couple of things. The networking sector has actually done a very, very good job in managing and navigating tariffs, right? From a sales perspective, we really haven't seen estimate cuts as a result of it. From a gross margin perspective, we're thinking about 100 and 200 basis points, and that's already reflected into consensus expectations. What I don't know, right, but there are a lot of enterprise IT spending surveys that are out there saying that they are going to start potentially siphoning off some of their spending plans. One of the things that I will say is that enterprise networking tends to be a more mature and commoditized market. So if there's going to be a couple of areas of spending that could be curtailed, PCs obviously, but also networking would be second in line.
Hey, Woo-Jin, we've been making a big deal about, well, it is a big deal that NVIDIA crossed the, $4 trillion market cap.
Yep.
Can that be sustained given what you just said? Let's talk about the multiple expansions.
Sure. So I'm not the NVIDIA analyst. I can talk from a high level in terms of what's going on in NVIDIA, as well as some of the drivers to earnings growth. If we look at some of the AI initiatives that are going on, whether it's by the hyperscale cloud guys or some of the sovereigns and these neo clouds like CoreWeaves, they're building out these 100,000 GPU type of installments. This is lasting, based on my work and my colleagues' works, this is lasting over the next couple of years. The only game in town for high-end GPUs to train AI models is NVIDIA. So is there sales momentum as well as earnings momentum to support it? Yes, there is for NVIDIA, as well as the rest of the supply chain.
In the note, you mentioned, or it was mentioned, that we aren't seeing any trade overhang risks when it comes to demand in the latter half of the year, and they aren't really reflected in consensus and in valuations. Why do you think that's the case?
Yeah, I don't know, right? I think what happened was after following the first quarter results, the companies have not yet really fully reflected the tariff impacts into their expectations, and consensus have carried that through the rest of the year. There has been very little indication after following first quarter results with regards to a pullback in demand, or more importantly, a pull forward in demand that's going to affect the second half. So, my guess is that I'm waiting for what the second quarter results are going to tell us in terms of the second half.
Wooj, thanks a lot. Appreciate it. Woo-Jin Ho, the senior technology analyst from Bloomberg Intelligence, joining us there from our Princeton, New Jersey campus.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Do you have a pet?
I used to growing up, but now I live alone I used to growing up, but now it's hard in New York City. You have to take them out in the morning, at noon, after work, and for some, even before bed. Do you have a pet?
Used to, but
Used to. Same.
I was so upset when we lost her that I can't bring myself to
heartbreak.
replace her. Well, that's a bummer. Diana Rosero Pena is our consumer staples analyst, and she's here to tell us about just how much we spend on pets. It's like a staggering figure, isn't it?
Yes, and it's going to keep growing up over the next 5 years. We expect globally that the market might reach about $500 billion by 2030.
Oh, only $500 billion.
That's it.
What in God's name are people? I mean, yeah, it's obvious dog food and stuff like that, but is there anything else I need to know about, like dressing their pets up in little crazy costumes and stuff like that?
And little boots.
Little booties.
Yes. So there's been a couple of things. Food remains the biggest expense for pet ownership. It's about 30-40% of the expenditure. But there are other things that come with owning a pet. Now people are more willing to get into discretionary, vests and shoes for their dogs and crates and the things like that. Also, healthcare is a big thing. People are more willing to spend more on the healthcare of their pet than they used to.
Why is that? Is it because more dogs are getting sick, or is it more because of the insurance company? Why this trend?
Well, it's a couple of things. First of all, the humanization of pets. Now people consider them as family, so they're willing to spend a little bit more to keep their family member around. So there's a greater acceptance of that kind of attitude.
And who benefits the most from all this? What particular companies? I think when we used to feed our dog,
human food, actually, when I was younger.
No, you don't feed them human food.
Well, yeah, maybe that's why my dog wasn't the healthiest.
Well, human grade food, I will guess. So it really depends. If you're looking at food, the big food companies, Nestle, Colgate, Mars, General Mills, they have, food offerings in different price points. But on the more premium side, you have things like Freshpet, that they have the fresh frozen, which is really like human grade food that you just, take it out of the fridge and you give it to your dog.
We know that
like Isabelle.
Sadly, I shouldn't have said that. So we know that Americans love their pets, and everyone knows that. To your point, people are delaying having children because they have pets, or in part because they have pets and because the economy is tough. Where does the U.S. stack globally?
Yes, so we're still about 40% of the market. We're probably going to grow about 35% compared to the 38% that we expect over the next 5 years. So we're still going to be the biggest, the most mature part of the industry. There's others that might grow faster than that. There's other regions outside of Europe and the United States. However, that size of the pie is smaller, obviously.
It's not just dogs. There was a fascinating Bloomberg profile of a guy, I think he must have been Florida, who sells designer geckos. And some of them fetch a fortune, like $5,000 for a little gecko. What's the most popular pet? Is it the dog?
It's still dogs and cats, and that is mainly, where we focused on. Of course, there's others like hamsters and cobras and things like that, but that doesn't.
By the way, just parenthetically, don't put the hamster near the cobra.
Oh my! Fish is also. I don't want to imagine.
That should seem obvious.
But fish is also fun. I think it's good training for young kids. They just feed it once a day. The cleaning of the aquarium is always tough, though.
Yeah,
don't
it shows
smell
them
that.
Responsibility for sure.
Okay, so we know that e-commerce sales. You wrote in your note that in the U.S. it might reach 27% of the total from 20% in 2020. So we have that. We have the pharma market. We have the food market really just growing. What could be what could be the hindrance here? What headwinds are you seeing in this space?
Well, we actually see certain pockets of the market being a little bit more conflicted, particularly in the past year. Discretionary spending, we did make fun of the vests, and even, popular fashion brands are expanding their names into pets. But that part of the spending has been a little bit subdued, I want to say. And part of it is because the pet population has been, not growing as much as they used to, like back at the beginning of the pandemic. But another thing is obviously the economic situation. People are curbing their spending. So that is like one of the first few things. In terms of premium, we still think it's going to premium food. We still continue to think that it's probably going to get to 57-60% of the food in the U.S., like the overall food. But the cadence is probably going to be more like 27 on rather than shorter term. We think people are going to probably get with kibbles rather than the fresh frozen part.
Diana, thank you. Diana Rosero Pena, the consumer staples analyst. How the world is going to spend $500 billion on their pets.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.